Welcome to Coach's Corner. I'm your loan partner, Tim Lee, and this is
your mortgage coach, Nathan Kirpin.
We're glad you've joined us today. We have something that we're going to be talking about today. We had a client who got 84 calls in a single day.
Yeah. Oh my goodness. Yeah.
Tell me more about what this is and why someone would receive 84 calls. It's been his friends are calling to congratulate him.
Right. Yeah. They all were clamoring. So for the longest time, there's been this thing called trigger leads. Okay. And trigger leads have been a plague on the industry probably for more than a decade, honestly. I can harken back to a client that I was serving, a veteran I was coming alongside maybe a decade ago in the Chicago area. Matter of fact, it was a state commander, the VFW, referred him to me. It was one of his veterans who wanted to save money on their home. And we had done a great job communicating with him, helped him. We were structuring a loan and a refinance. We literally had him saving hundreds of dollars a month, making it way more comfortable for him to live, and had him in processing. And we were a couple days in, and we were reaching out to him and saying, okay, well, we need this and this. And he goes, well, I already gave your lady the paperwork.
Oh, no.
So this goes way further than the 84 that we just experienced. And what had happened is this person in major metropolitan areas, it's been a bigger plague. So that Chicago area, it wasn't something happening here in the St. Louis region so much, but in Chicago at that time, it was a major metropolitan area, busy market, et cetera, and a lot more leads for these companies to buy. So what had happened is this client had been convinced by a random lender. This lender even said, hey, I work with Nathan all the time. Lied to him. Got him to send his paperwork to her. Okay. And here I am, like, we're just trying to, get things going and do a VA IRRL for him, a very simple loan to help a veteran with, as far as, complex, streamlined, right? It's not complex, but needed a few things. And this lady had straight up lied. And so the plague has been going on for a long time. And matter of fact, the day we're recording this, I'm proud to report that there was a law passed. Our industry has been lobbying for years. There was a law passed last year that goes into effect today, March 5th, 2026, that trigger leads are now illegal except for under certain circumstances. So what is a trigger lead? Right?
Yeah.
Sorry, go ahead.
Well, if he's gonna ask all the questions that I intend to ask, then we can just cut this camera and he can talk to you guys.
Yeah, I'll talk to myself.
What is a trigger lead, Nathan?
Sorry, we're still getting used to this, guys. A trigger lead is something the credit bureau. Okay, the credit bureau is
what is a credit bureau, Nathan? Just listen, we can't assume.
Yes. So a credit bureau is a for-profit corporation. They may use the word bureau to make themselves sound very governmental. And they are subject to government laws no different than Benchmark Mortgage is subject to federal and state regulations. But they're not a federal or state-ran, chartered, or anything sort of organization. They're a for-profit data company. Okay? So the big ones that you know of, Equifax, Experian, and TransUnion, or for-profit companies. What do they sell? You. They sell your data, and they do it on a regular basis. And one of the things they sell, and they've been selling for a long time, are these trigger leads. So what is the trigger? The trigger is you're working with your hometown lender or whoever it is you're working with, and as soon as we pull your credit with a hard inquiry, right, then the bureau knows.
Okay, so a couple questions then. Number one, I would say, is why isn't Credit Karma on your list of 3?
Well, because they're not a credit bureau. They're not. Interestingly enough, they're a for-profit corporation, right? So they're sort of a public-facing marketing and advertising company who's really they exist because they're even buying data from the bureau. You go into their system and give them permission to access your data. But in the end, what they're selling, because Credit Karma is free, right? They're selling the aggregated data, the pre-screen information, right? You're basically enrolling to be pre-screened for credit offers via Credit Karma, which is why they have all these advertisers pop up to you.
Right.
And that's what they sell. So they're selling to the advertiser, right?
Right.
Same thing as a credit bureau. Credit bureau, we pay a lot of money, like 6 figures a month as a company, and that's probably on a low end, to the credit bureaus to be able to obtain the data that our clients allow us to obtain on them to pre-approve them or approve them for loans. Well, the bureaus have been basically, I don't know the proper saying for this, but they've been, selling us down the river?
Okay.
Because we're paying them for the data, and then they're turning around and saying, hey, lenders, we know this person here is applying for a mortgage.
Right. And you said that comes from a hard pull.
Yes.
So then question 2 is, what's the difference between a hard pull and a soft pull?
Well, a soft pull is basically an incognito credit inquiry. Like we have to shift to save our clients from this grief of so many calls and so much spam calls, right? Mm-hmm. Even one of my buddies online was like, does this get rid of all spam calls? Like, no, unfortunately, what we're talking about today does not outlaw all spam calls. It just is specific to these trigger leads. And there are even caveats to where they are still allowed. There are some relationships you already have established that are still allowed to call.
Yeah, I am apparently approved for like $70,000 loan that I have not applied for, right. And I cannot get off. I mean,
off the list.
I've clicked the button, the 9 a dozen times, but it is what it is. So
yeah.
Okay, so the difference between a soft pull and a hard pull is essentially this trigger.
Yeah. Well, the hard pull puts an inquiry on your credit. That inquiry is data available, right?
Okay.
And so ABC company, A through Z lender, right, out there in the world, who's primarily, these are telemarketing farms that are buying these, right? Mm-hmm. And they have their telemarketing systems set up to hammer you, okay? Such as the client we just served here now was hammered with 84 calls the day we shifted him from the soft qualification to putting his loan into processing and underwriting, which does require the hard bureau pull. Unfortunately, there's no way really around that because that becomes part of the underwriting and everything that goes in the file.
Right. So even another client that we were dealing with, we had done the soft pull initially, and we had run some numbers, and we found a challenge that we kind of went a little bit further down the road here, addressed that. But now we need to do the hard pull, and we need the authorization in order to do that.
Well, we have the authorization. Matter of fact, it's already been done. So
you
might want to inform them
that
they may.
Well,
maybe today was the right day.
Right.
We're going to test the law for you, right? We're going to have clients, and that's going to be the thing. I mean, we all know these spam callers or maybe we don't know them, right? Because they're calling from random numbers. They're calling from all these things.
Random number generators. And
these trigger leads for the mortgage industry have been doing the same. They're just like any other spam call, except for how they got your data. So what's changed, and with this law, is they'll no longer have access to your data, okay? They will not be able to buy that from the bureau. So we've really removed a profit center from the bureaus. So no wonder our prices have been going up so dramatically,
right?
Because we've been cracking down on their profit centers, and the more things have gotten tricky in the economy, therefore things slower, especially for these telemarketing farms.
Right.
The more we've actually seen it just be out of control, where it is now impacting a community like the St. Louis metropolitan area, because they've already ran it dry in Chicagoland and Atlanta and the West Coast and the East Coast, places like that.
Yeah. So let me ask this then: is there an effect on my credit that is different for one of these others? If I had a hard credit pull, is that adversely affect? Is it positive effect? Is it if there's a whole bunch of what is that?
Well, I will roll that back. So I can harken back. The answer is yes. So there is soft pulls don't have an impact. Like, it's very incognito. The bureau doesn't show it, therefore you don't lose any points. But you will, and again, these are algorithms, so they can't be held to an account as to an exact impact. But generally speaking, a hard credit inquiry is going to reduce your credit by at least 3 to 5 points. Okay, which is why you don't want to go out and let there are certain industries that say this doesn't apply to them. I know for a fact the mortgage industry, actually, we do have a carve out that if the lender is properly registered with the Bureau, having multiple lenders pull your credit, in like a 30, 45-day window, the initial inquiry should be the only initial hit, right?
Okay,
because they carved out back in the mid-2000s that was kind of a big hole in the system where people felt like it was detrimental. And it was, because when I started back in 2000, 2001, I was the only honest guy that would tell them, like, well, how many calls did you have before me?
Right.
And they're like, oh, I talked to 5 people before you, because they were calling out of the newspaper back in the day. And long and short, I was like, well, how many have you had pull your credit? Did anybody tell you? And they're like, wow, nobody told me.
Right.
And I would win business just because I would bring clarity with certainty.
Yeah, authenticity and the reality of a situation. I mean, that carries through, and people appreciate that in this process. So, I would say too that even with this, there's probably already trying to figure out how they circumvent it. And a final question as we wind it down, just real quick, beyond just the phone calls. I saw that we had a client that reached out and said, hey, I got this document or screenshot.
The junk mail, right? So, yeah.
And really answering the question so that we can kind of keep it concise. How do we may not be able to keep them from happening. What do we do when it does happen? Because it's still going to come in.
Well, don't fall for it is the best answer, because junk mail is junk mail, and again, most of you live in areas where your mortgage is a public record document recorded at the courthouse, and if it's not, there's some other way they're finding out that you bought a home or that you did something, and all of that data that's on that mortgage is publicly available.
Right.
And so what do? They send you junk mail with your name on it, my name on it, your loan details, in regards to your loan with Benchmark Mortgage. And all of a sudden you're calling them and they're trying to sell you life insurance.
Right.
Or you're calling them and they're trying to refinance you acting like they're us. And so that's why we keep it simple with our team. Is we always say, hey, we got one call that does it all. You can call us, text us, and you're going to reach our team at that line.
What's that number?
That number is 314-551-9587.
Yeah, so if there's more questions that you would have on this or other things, or if we can support you in your buying, refining process, whatever that might look like, even selling, we'd love to refer you to a great realtor, that type of thing. We'd love to connect with you in that way. So give us a call on that line.
Yeah.
And we've been your loan partner and
your mortgage coach over at Benchmark Mortgage. And
the Coach's Corner.
There we go.
Have a great day.
See you next time.